Welcome to The Brain Factor, hosted by myself, Joy Riddle, and Laura Hawley. We're a part of Meridian Behavioral Healthcare, where we believe that wellness is within everyone's reach. This podcast is a conversation about what research-based protective factors look like in real life. Our hope is that you'll walk away with something that you can use in your own life and have had some fun with us along the way. So let's get started. Welcome to The Brain Factor. Thank you so much for joining us today. I have a guest co-host with me today, Amy McCon, and she's a vice president at Meridian over our community mental health centers. And also we have with us today from First Federal Bank, we have Stephanie McClendon, who is an executive vice president over community banking. Yeah, so welcome. Today we're going to be talking about the protective factor, financial and economic security. So we know that good financial planning and solid principles can bring us some freedom and stability and even good mental health in our life. And we know that the basis of that, or at least I think the basis of that, is starts with a good budget to get us where we need to be. So I wanted to ask you to come on today as our guest. And you know that Meridian's celebrating 50 years this year. And Stephanie McClendon is also on our board of directors, and First Federal is a community partner of Meridian. So we're really excited to have you here today.
Well, thank you so much, Joy, for having me. I really enjoy being here with you all, but the opportunity to talk about budgeting, because it's just as important as mental health is having that peace and security when it comes to your finances. So again, thank you for having me here today.
Yeah. I think our audience would like to know, well, first, I said that it's really impactful on your mental health, and Amy is an actual licensed clinician. So I thought maybe we'd let her talk a little bit about how those two things tie together.
Absolutely. And I did some research, and the National Institute on Mental Health and Finance policy came out with some statistics that 46% of people struggling with financial issues have mental health issues, and that those who are struggling are 3 times as likely to commit suicide. That those that have depression and have financial issues take about 18 months longer to recover than those that don't have financial issues. So it does make a big difference in our.
Is any part of that because if they are struggling financially, maybe they don't have access to care because of financial reasons, or is it just that, I know when things are, way back in the day when things were rough on me, when my life wasn't exactly what it was. I mean, that was always in the back of my mind. Oh my goodness, how am I going to pay this? How am I going to pay that? How am I going to do this?
Absolutely. And I think that's probably a portion of it because those that have mental illness are known to have lower income paying jobs and difficulty sustaining employment. And so therefore the cost of care can be put into that. But I also think that, financial insecurities or financial difficulties, even with somebody who doesn't have mental health issues, it can onset those symptoms. There's multi-facets to that problem.
Because I guess it initially maybe causes stress. And we know that if stress goes untreated for a long, long time, it can turn into
anxiety and depression.
Panic.
And it becomes such an issue that then it increases the financial issues, and then the problem becomes so much bigger than if it had been dealt with at the beginning.
Yeah. So why don't you tell me how someone can get started budgeting?
Sure. Just to add to what Amy was just saying, that the stress, just the family, loss of sleep, the parents, the fighting, the communication, it trickles all the way down to the young ones, and they see it. And being in banking over 23 years, it's really been an eye-opener for me, also my colleagues, to see that the younger generation, budgeting is very important to them. And the reason being is they saw mom and dad in 2007, 2008, what they went through. Cars being repossessed, a lot of foreclosures, having to downsize, and they will tell you, I'm not going to go through that. I'm not going to live like that. So I think it all starts if you can get to them at a younger age and get into the high schools and offer that financial literacy. We offer a class on
great.
budgeting. We do. When young ones come in to open an account, we actually have a book called The Basics of Banking, and it's got 2 pages in there, and we complete a budget with them.
Oh, wow. That's impressive.
Yeah.
Nobody did that to me when I was
We'll
when I
even
was
give
out.
it to mom and dad if we need to.
Yeah.
And go over,
Just
okay.
saying I might need that.
Yeah, we have plenty of them. We'll pass them out. But helping them to see the importance of a budget, planning ahead for the income that they have coming in, on a monthly basis, and what is the most important, the rent or the mortgage payment, your utilities, your car payment, and making sure that they account for all of that in the very beginning versus all the play and then what's left over. So I think key is at that young age of helping them, because unfortunately, even at my age, budgeting wasn't something that was really talked about in school. And I have to say, I love my parents. They were wonderful, but I don't recall them sitting down and say, let's talk about a budget and let's plan one. But there's a lot of resources, even though online. But I know that your financial institution, whether it be a bank, a credit union, they offer where you come in, sit down, and there's different templates that you can use. But I would say key is catching them at that 11th, 12th grade year and helping them to understand how a budget works and sticking to it.
Yeah.
And I love how in the area I live, you guys actually have a branch in the local school.
Yes, we
Yes.
sure do. We have 2 branches in our local school. And that was part of it, because we knew that if we could get a presence there, it would make that, top of mind, the piece of banking and the importance of it. Budgeting is so important because it helps also to establish that credit, which is a totally different subject for another podcast. But budgeting falls into that because you need credit to live, and if you don't budget properly, you can ruin credit really fast. So yes, that's one of the reasons that we wanted, core reasons, to get into the schools and have those branches.
Yeah, and kind of the presence normalizes the topic, the discussions around financial health, just like having discussions about mental health can help decrease the stigma.
Absolutely. I agree with you, Amy.
Yeah. Well, that's great. So how do we get started? What do we do? And what if, well, just go ahead. Let's get started. Yeah.
Well, if you really want to say, okay, it's kind of like they say, stop the bleeding. You have to make that decision. Okay, it's time to start a budget. I don't want to live paycheck to paycheck anymore. I want to be able to save and put aside. So I think to get started is you've got to gather all of your bills. You've got to take the time to sit down, and you've got to outline everything. This is what I have coming in versus what I have going out. And then you have to do the part that no one really wants to do. What are the necessities and what are the wants, and where do I have to start cutting back? Because unfortunately, sometimes when you get the income put down and then you start putting down all the bills, you realize, okay,
you're upside down.
We're upside down. And that's not the fun part. That's where it gets kind of hard, deciding, sometimes, unfortunately, it means that you do have to simplify and downside. Might mean selling the extra car. It may, be unfortunately looking at maybe we need to downsize, size in our home. Maybe we're a little over our means. So that's, I think the key is stop the bleeding, sit down, look at all your bills that you have going out compared to what you have coming in, because so often, coming from the financial world, working in banking, I see so many where they want to run from it. They just think, I'll catch up next month. I'll catch up. And unfortunately, when you get about a month behind, or I say in that hole, it is extremely hard to get out.
Yes.
Extremely hard.
Yeah. And when we're dealing with financial health, and then you have the anxiety that comes with that, the impulsivity of wanting to buy things when we don't feel good, or buying things, even, or it's just a one-time purchase. So even being able to list what we want in the future and planning those steps, and maybe even putting, that picture that I wanted that car up on my bathroom mirror, and knowing what I'm working towards, and writing down the plan so I can see the progress step by step, is I think also a very important aspect of budgeting.
I agree. It also helps you to kind of cut bad spending habits.
Yes.
Kind of keeping your eyes on that prize. Like you said, working towards it. So I always encourage, young ones, no matter what age,
Yes.
start an extra, sometimes separating accounts, putting aside, doing that challenge. If you get paid weekly or bi-weekly, putting a percentage back. If it's even $5,
So you're doing something.
You're doing something.
something.
And I think, as Amy said, when you can see it, visualize, and when it starts to grow and accumulate, it's amazing at the end of the year,
Yes.
what you've accomplished.
Yeah.
A lot of times institutions will have separate accounts, whether it be a holiday, a Christmas, savings account or a vacation savings account, and they limit how many times you can get to it, withdraw from it. So that helps as well. But I think it's a visual. People need to see that. I know I'm a very visual individual as well. And so
I need benchmarks all the time.
Exactly.
Otherwise, I'm
Yes.
like, oh, I'm stuck.
it's the truth. And the feeling of accomplishment, like you said, when you have to work really hard to pay for something versus putting it on a credit card or taking it from funds that really should be used towards the mortgage or the rent payment, it's a feeling of accomplishment. You made the comment about purchasing and buying when we deal with anxiety. I think that's all of us. I don't care what your background is.
Right.
And I see more of it with the last couple of years during this pandemic. People are stuck at home, and it was so easy to click and put in the cart. Click
Yes.
Yep.
And before you know it, you have a cart full, and it's like, wow. And it really was from just the anxiety of being cooped up and the pandemic and not being able to go anywhere. And so I think anxiety plays a big part of the economic, with the loss of income and the stress. It just, for some reason, we find that, or we think that that's a stress reliever when it's really adding more stress, less sleep when those bills come in.
Well, I expect that it has to do with the reward center in the brain too. The same one that makes us want to eat potato chips or maybe have a drink or what, it hits that reward center and we feel better. I know I remember many, many years ago, probably when I was a kid, learning that in like the Great Depression, lipstick sales went up really high because sometimes when there are tough times, you can still maybe get that type of thing by, purchasing a little something. So instead of buying, a $500 bag, you can get a lipstick and maybe still satiate that same desire in a different way. So I wonder if it would be wise to include stuff like that in your budget. If the money is available to have like a little bucket that, would you account for your entertainment or spending?
Absolutely. I kind of think of an individual when you go on a diet. How many people will go on a diet and they'll go, let's call it cold turkey, and they cut out everything
all at once.
And then all of a sudden you see that they fall off the wagon and they're right back at their bad habits again. And so I think it's the same when it comes to a budget. And I agree with you, Joy, that you should have a bucket, whether it be $50, $75, $100, whatever it may be, but you cannot, I don't believe you can completely go cold turkey, because I always go back to that whole diet theory, because I've tried that and it might go really well for about 30 days and then you just fall off the wagon, and everything you've accomplished, you they always say, and I believe it, you gain back double to what you lost.
Absolutely.
So it's the same when it comes to budgeting, that you do need to budget for those little extras, because you work hard, and as a human you want to feel, like you reward yourself, like you said, for what you're doing. And so always, account for that. But key is making sure that those, the priorities, the mortgage, the rent, maybe the car payment, the gas, groceries, those things are accounted for. And then what you have left over, a percentage of that going into that little bucket of, extras. And then always trying to put back to your savings account. I've always been told, and I think now, more so than 3 months, I think it's really 6 months that you should try to have in a savings account. Probably 5 years ago, they would say 3 months would suffice. I feel like 6 months you really need to have in a savings account, because of just the price, inflation, everything that we're seeing. And if someone in the household were to lose their job, you need to be able to float for at least 6 months.
Yeah. So when we've talked about this protective factor in the past, a lot of people think that the strategy is, I need to make more money. I need to get more money. But but that's not always reasonable. So then we have this budget, we're upside down and we're thinking we're going to get more money, but that's not a valid strategy.
No, it's not. And then it goes back to looking at the budget and looking at what you have now in the debt. And then I think you have to drill down then to also sometimes, we think, well, we got to put into savings and we'll just keep paying the minimum on these credit cards.
Yeah.
You got to then go back to the theory, stop the bleeding. Let's look what the interest is costing us.
Yeah.
And let's try to take extra to start paying those down. And then you can pay yourself back first, but you're spinning your wheels. If you're only paying the minimum and you're still trying to put into a savings, you're really costing or taking more, because what do they say? The average is 30 years to pay off a $3,000 or $4,000 debt because the interest is so high. And again, people need to pay special attention to that right now because of the interest rate hikes. The Fed meets again. They plan to raise the rates again. So that means your credit card interest rates are about to go up. And so pay attention to the interest that you're paying and try to focus if it's one at a time. If it's, sit down, you realize you're upside down, let's take the smallest one first and let's try to pay on that as much as we can. Go to the second one. And then, my girls have taught me so much. They'll say, once you get those paid off, that's what you start putting back in your savings. You start paying yourself back, because if you are able to be determined and committed to being able and disciplined to pay those off, that's what, then you can live without that. And you start putting that in your savings. But I think it starts with sitting down, analyzing those statements, see what that interest rate is, how much are you giving and interest. It really is an eye-opener when you look and you think, wow, I'm paying this back each and every month for that little bit of, of reward, of that feeling that I had, that $1,000 has turned into $5,000 now. So again, it takes determination and discipline on your part to sit down and to really review and analyze. But right now is a very important time, I would say, to any average American consumer out there. You need to take a look at your statements and you need to pay attention to those interest rates and see how the interest is about to rise, and see what can you do to focus to start paying some of those down, that debt.
Yeah, and I think to couple with that, I think it's also important to have a support system of people who will encourage you towards your goals. Because it's very easy to get with people who may not have the same financial goals, and they're like, come on, and you're like, oh, I gotta be with my friends. I don't want to not be with my friends, and then I'm spending money that I don't necessarily have because they're in a different place than I am. Or even, making it like a scavenger hunt to find things, like online coupons to go do things, or finding free events, because there is so much out there. I think we live in this microwave society where everything's instant. And so, it's the instant in the cart, it's instant through a drive-through, everything's instant. So, even putting in the cart and then making yourself sit on it for 24 hours to make that decision, to, allow that impulsivity to pass. There's ways to cope with it and to deal with it so we can achieve our financial goals.
I agree. It's funny that you said that about the instant, and I know that we're really going more towards a cashless society, but I know that for myself and others, when it's instant with that debit card swipe,
it feels like nothing.
You don't think about it coming up. But if you really can try to deal more with cash, it's very hard to hand someone over that bill because you think twice about it. I know that I do. I will hang on to $5 in my purse because I just think, well, what if I need it and the card won't work? So, sometimes when folks just get into that pattern and they can't get out of it, I do encourage that, well, maybe you should consider that. Maybe you should consider trying to operate a little bit more with cash and limit your debit card for only certain transactions. I know that when I've practiced that, it really has helped me stay within a budget.
I do not like to let go of a bill out of my wallet.
I probably have $2 or $3 bills in there, but I will not let them go because I'm like, well, this is what if I get in a situation and my card won't work? And so that's how my mind thinks, just kind of the flow that it goes through. But I think a lot of human beings are like that. So again, when you swipe that card, you don't see it. It's just so quick. And it's gone. So
I don't even know how many of us use a check register or anything anymore.
You have mobile banking, you have online banking. You just
log in and see where am I at.
Exactly. Very few reconcile now.
Yeah.
So sometimes, I'm not saying that's always the answer, but some it would work because then they have to actually think about, like you said, when they're handing that over, is that, do I really need this? Or maybe I don't need, at this level, maybe, do I really need the car? this version or this name brand clothing. And so it helps me to think when I have to
Yes.
use cash.
Yeah.
I know some people that are, and I try to do it, but I'm not always successful with it, is not do anything when I'm excited.
Mhm.
Buy nothing when you're excited.
Good advice.
Wait.
Or even
Yes.
sad. If I'm
True.
feeling really
Yeah.
down, or
Mm.
if I'm feeling really edgy or irritable,
Yeah.
Yes.
you know,
I
make
think
sure.
that it's the truth because if you just, like you said, just in a bad mood, or sometimes buying is like you then feel like you're in control of that.
Yeah,
and so you make
something,
that
yeah.
decision because you're controlling that. But then afterwards,
Mhm.
it's like, why did I do that? What was I
Mhm.
thinking? And so
Mhm.
I think you're right. And to having that accountability partner,
Mhm.
someone that you can call and say, okay, let me tell you about the purchase or maybe the trip or something I'm about to, buy.
Yeah.
Let's talk through this.
Yeah.
But maybe finding someone that's not the same personality as you
Yeah.
that can kind of help you because
Yes.
when you have two of the same, they're both going to encourage each other.
Yeah. It's
know?
like, oh, you work hard. Just do
Absolutely.
it.
Absolutely. I'm
Yeah.
probably guilty of that, encouraging people to say, oh, you work so hard, you deserve it. But everyone deserves, to reward themselves. But I think about this, we can't reward ourselves every single week.
Yeah,
right.
You can't. So it goes back to what you said, putting that picture on the wall of this big item that you want and working towards it.
Yeah.
Yeah, and it's also about learning how to cope with our stressors and some of our anxiety and our depression so that it doesn't come upon acting out, because it's not just spending that can be impacted. I mean, look at the increase in alcohol and substance use since the pandemic,
Yeah.
or,
Yes.
the broken relationships. I mean, so much is impacted. So being able to learn to cope with what's really going on and being able to be willing to look at what's really going on. I mean, I think that's a key factor, and it can assist in financial management.
It's a great point that you make, Amy. So many people are seeking happiness. And so they put themselves in debt thinking that the money is going to find or buy their happiness instead of, like you said, addressing it or coping with whatever they're dealing with. And so that's how they try to seek that happiness. And I think probably more so than ever in the last 2 or 3 years,
Yes.
you see that happening. And so you definitely don't want to turn to credit using, your income for all these extra wants because you're trying to find
Yes.
that happiness.
And that's a great point you make, especially with the holidays coming fast approaching.
Yeah. Yeah. So
So-
what do we do about that?
Yeah.
I think that, it's a good point. And right now is a good time. You're about 6 months out, really looking at, are we buying, what's the reason behind the
Right.
gift? And what are we buying, and putting a budget on it for each, individual that you're going to purchase for. I think that you got to hold yourself to that. I've heard a lot of families where they all come together in agreement and say, we're not going to spend more than XYZ, whatever that dollar amount may be. And then they all together, can work towards that, because it's hard being in banking, seeing someone come in the month of January and they have just outspent because they didn't know when to stop. So really looking at, are we buying? What's the reason behind it? And let's put a budget on it. And starting now, putting a percentage of your check back to where, November comes, that what you have saved is what you're going to use. And when that's gone, there will be no credit cards used and there'll be no extra to pull from. But I think it takes planning. A lot start in January, believe it or not. We have a Christmas Club account where people will start putting in, and then it disperses around the month of October. But if you are starting now in the month of June, that's okay. Start putting back now. Kind of have in your mind, though, this is what I want to spend. So you need to then decide how much do I need to put back from my check, and be committed. I'm not going to use a credit card. When this is gone, it's gone. But I think it goes back to, what is the purpose behind? Why are we buying? And do they really need that?
I think a good strategy too is just thinking about your holidays and what they are and what are the important parts to you.
Yes.
What is really important about it? Is it being with the people and maybe paring down on some of the extravagantness that's not necessary, and just really focusing on those things that are impactful and meaningful. So good for your stress, anxiety,
Absolutely.
mental health.
Absolutely. And at the end of the day, physical things are going to be thrown away. I mean, things break, things get tossed. Is there some emotional attachment? Yes. But is it as much as if it was a homemade gift or if it was a memory, or if it
Mhm.
was a tradition. So maybe looking to start new traditions that don't cost as much money, but involve time and involve relationship, to assist, because that will also help decrease the anxiety and the depression that could occur around the holidays. So spending time on learning how to make things homemade or starting a new tradition. Yeah, I think that might be good.
Great point. And think of the example that you're setting for your children.
Yeah.
As we talked earlier, it starts with them and what they see and they observe. So when you teach them what really is important, and the family time being together, and the homemade, gifts, that really has the highest value. And so I think that you stop that vicious cycle.
Oh yeah, because I think how many Christmas trees do you hear when they're putting the ornaments on the tree? Well, I made this in second grade, or I made
Memories.
Yes,
Memories.
yes, and connection.
I agree.
Yes.
Well, we're about out of time here on the Brain Factor. We're so glad that you joined us today. Stephanie, did you have anything additional that you wanted to leave people with about their financial wellness?
Well, thank you again for having me. And I encourage, please reach out to anyone at First Federal, but also to your institution. If you feel that you've got that stress, you really need someone to help you get started on a budget. I know that any financial institution be willing to help you. And that's the key. You've got to start. You've got to start somewhere and don't put it off. And now is a perfect time to do it.
Great. Well, thank you so much for joining us today. We really appreciate it.
Thank you again for having me.
Thanks for listening to The Brain Factor. Joy and I are so thrilled to be having these needed conversations. We'd love to hear your feedback on this episode, so if you could drop a comment or leave a review with your thoughts or any requests that you may have, it would be appreciated. Don't forget to like, subscribe, and share with your friends. Living a healthier and happier life starts with one step, and we're excited to be on this journey with you. Until next time.